You run a profitable health and wellness business and want to legally minimize your tax bill this year. There's something most gym owners, chiro owners, clinic owners, med spa operators really miss every single year. So when your business is profitable, the government gets paid no matter what. That is, unless you reinvest your business the smart way. So we're going to break down with real numbers how we can do this. All right, so let's run through a real world example of what this looks like. Okay, so let's say your gross revenue, you did $1 million. Okay, I'm making this all for easy numbers, okay? So your profit margin, 15%, okay? So that means your taxable income, again, profit, because in business, we don't pay taxes. We only pay taxes on profit, right? So taxable income is 150. Let's assume a 30% tax rate, okay? Obviously, depending on what state you're in, it could be higher or lower with your federal and state taxes. So let's say on average, this is what it looks like. So you're on $150,000 of profit, you're looking at $45,000 tax bill that is 100%. This money is being spent. It's going to Uncle Sam right now. So the smart businesses are going to find a way to lower this amount of the taxable income. Okay, so you can do this lots of ways. I mean, you can buy a cell phone, a front desk, you can do anything, right? But the smart business owners are going to be looking to add equipment that are going to generate revenue moving forward. Now, we're obviously very biased to red light therapy beds here at REJUVN for obvious reasons. There's a reason why I started the company. But specifically, if you were to reinvest into a piece of equipment like a red light therapy bed that can add 10 to 30K per month. What does that mean? Well, that's 120 to 360K per year. What does that look like? Q4, you're going to be making your profitable. It doesn't really matter how profitable you are, honestly, right? So you're going to minus cost of a red light bed. So our entry level bed is looking at about 30,000. Your taxable income now is 120,000 times still your 30%, which is going to give you a tax bill of about $36,000. Okay. So what this does, this is giving us a difference of $9,000. So this is $9,000. Again, remember, this was getting spent. It was either getting spent here, giving it to Uncle Sam, doing nothing for you, or you took this $9,000 and put it up here, right? Into a bed to give you this. So really what you're looking at, this is actually minus $9,000 for the cost of the bed because you're going to spend that money anyways. So you're getting a real piece of equipment at a huge discount of only $21,000 that you're able to add to this piece of equipment that again is going to be generating $120,000 to $360,000 per year. Remember, that is revenue that you do not need a practitioner to administer any other therapy or services or anything, right? This is literally somebody just jumping into a bed and getting it done. Right. So this is why we really think this is the best time of the year to add a red light therapy bed. So the big picture reframe, this isn't spending money. It's redirecting money you are already going to be giving away to somebody else. But you're putting this money into a depreciable asset. You're going to generate higher client lifetime value, LTV. You're going to be able to offer a premium service, but also, like I said earlier, you're going to have a predictable monthly revenue. And this is why Q4 is the smartest time of the year to add equipment, especially if your business is already profitable. So important note, this is a simplified educational example. Always confirm deductions and depreciation options with your CPA, right? This is not tax advice. So if you're already writing a big check this year, the real question is, do you want that money to go to the IRS or do you want it to be working for you? So comment, tax, or DM us and see how we can potentially help you not only lessen your tax bill for the year, but also add a predictable red light revenue system.